Before diving into the world of taxes, it's important to understand what tax brackets are and why they matter. Tax brackets determine how much of your income is taxed at different rates, and choosing the right bracket can have a significant impact on your finances. In this video, we'll walk you through the essential questions you should ask yourself before selecting a tax bracket. By the end, you'll feel more confident about making informed decisions regarding your taxes and maximizing your financial well-being. One of the first questions to ask is about your filing status. Are you single, married, filing jointly, married, filing separately, head of household, or a qualifying widower? Your filing status determines which tax brackets apply to you and can influence your overall tax liability. It's crucial to accurately identify your status, as it sets the foundation for all other tax-related decisions. Take a moment to review your personal situation and ensure you're using the correct status before moving forward. Next, consider your total income from all sources. This includes wages, salaries, bonuses, investment income, rental income, and any other earnings. Knowing your total income is essential because it determines which tax bracket you fall into. If your income changes significantly from year to year, your bracket may change as well. Make sure to gather all relevant documents and calculate your gross income accurately before proceeding to the next step. Deductions play a major role in determining your taxable income. Ask yourself which deductions you qualify for, such as the standard deduction or itemized deductions like mortgage interest, medical expenses, or charitable contributions. These deductions can lower your taxable income and potentially move you into a lower tax bracket. Review your expenses carefully and consult the latest tax guidelines to ensure you're taking advantage of all available deductions. Tax credits are different from deductions and can directly reduce the amount of tax you owe. Common credits include the Earned Income Tax Credit, Child Tax Credit, and Education credits. Ask yourself which credits you might be eligible for, as they can make a significant difference in your final tax bill. Research each credit's requirements and keep documentation handy to support your claims when filing. Retirement contributions, such as those to 401k or IRA, can lower your taxable income. Ask yourself if you've made any contributions this year, as these can affect your tax bracket. Not only do retirement accounts help you save for the future, but they also provide immediate tax benefits. Review your contributions and consider increasing them if you're close to moving into a lower bracket. If you're self-employed, your tax situation can be more complex. Ask yourself about your business income, expenses, and potential deductions like home office or equipment costs. Self-employed individuals may also need to pay self-employment tax, which covers Social Security and Medicare. Understanding these factors is crucial for accurately determining your tax bracket and avoiding surprises at tax time. Investment income, such as dividends, interest, and capital gains, can affect your tax bracket. Ask yourself if you've earned any investment income this year and whether it's taxed at ordinary income rates or special rates for long-term gains. Understanding how your investments are taxed will help you plan more effectively and avoid unexpected tax liabilities. Major life events such as marriage, divorce, having a child, or buying a home can impact your tax bracket. Ask yourself if you've experienced any significant changes this year. These events can alter your filing status, deductions, and credits, so it's important to factor them into your tax planning. Keeping track of life changes ensures your tax return accurately reflects your current situation. Having dependents, such as children or elderly parents, can affect your tax bracket and eligibility for certain credits. Ask yourself who qualifies as a dependent in your household. This can influence your filing status, deductions, and credits, potentially lowering your overall tax liability. Make sure to gather all necessary information about your dependents before filing. If you're supporting a dependent and meet certain requirements, you may qualify for head of household status. This status often comes with a higher standard deduction and more favorable tax brackets. Ask yourself if you meet the criteria, such as paying more than half the cost of keeping up a home for a qualifying person. This can make a big difference in your tax outcome. State taxes can vary widely, and your state of residence may have its own tax brackets and rules. Ask yourself about your state's tax system and how it interacts with federal taxes. Some states have flat taxes while others use brackets similar to the federal system. Understanding your state's requirements is essential for accurate tax planning. If you have more than one job or multiple sources of income, your total earnings may push you into a higher tax bracket. Ask yourself about all your income streams, including side gigs, freelance work, or passive income. Combining these sources accurately is important for determining your correct tax bracket and avoiding underpayment penalties. Major purchases, such as a new home or car, can affect your tax situation. Ask yourself if you're planning any significant expenditures that might qualify for tax deductions or credits. For example, mortgage interest or energy-efficient home improvements can impact your taxable income. Planning ahead can help you maximize tax benefits. Student loan interest may be deductible, which can lower your taxable income and potentially your tax bracket. Ask yourself if you're paying interest on student loans and whether you qualify for this deduction. Keep records of your payments and consult the latest IRS guidelines to ensure you're claiming the deduction correctly. If you're receiving Social Security benefits, part of your benefits may be taxable depending on your total income. Ask yourself how much you receive and whether you have other sources of income. Understanding how Social Security is taxed can help you plan for your overall tax liability and avoid surprises. Contributions to health savings accounts, HSAs, are tax deductible and can lower your taxable income. Ask yourself if you have an HSA and whether you've made contributions this year. These accounts offer both immediate and long-term tax benefits, so it's worth considering them as part of your tax planning strategy. Education credits such as the American Opportunity Credit or Lifetime Learning Credit can reduce your tax bill. Ask yourself if you or your dependents are enrolled in eligible educational programs. Gather tuition statements and receipts to support your claim and ensure you're maximizing your education-related tax benefits. Charitable donations can be deductible if you itemize your deductions. Ask yourself if you've made any donations to qualified organizations this year. Keep records of your contributions as they can lower your taxable income and possibly your tax bracket. Make sure your donations meet IRS requirements for deductibility. Payments for alimony or child support can affect your taxable income depending on when your agreement was finalized. Ask yourself if you're making or receiving these payments and review the tax rules that apply to your situation. Understanding how these payments are treated can help you accurately determine your tax bracket. If you've sold investments at a loss, you may be able to use those losses to offset capital gains and reduce your taxable income. Ask yourself if you have any capital losses this year and how they might impact your tax bracket. Properly reporting these losses can help you minimize your tax liability. Alternative minimum tax, AMT, is a separate tax calculation that may apply to certain taxpayers. Ask yourself if you might be subject to AMT, especially if you have high income or claim many deductions. Understanding whether AMT applies can affect your overall tax planning and bracket selection. Foreign income may be subject to different tax rules and reporting requirements. Ask yourself if you've earned any income from outside the country and whether you qualify for foreign tax credits or exclusions. Properly reporting foreign income is essential for compliance and accurate tax bracket determination. Unemployment benefits are generally taxable and can affect your total income for the year. Ask yourself if you've received any unemployment payments and include them in your income calculations. This will help ensure you're using the correct tax bracket and avoiding underpayment. Rental income from properties you own must be reported and can impact your tax bracket. Ask yourself if you've earned rental income and whether you have related expenses to deduct. Keeping detailed records of income and expenses will help you accurately report your rental activity and determine your tax bracket. Inheritance can sometimes affect your tax situation, especially if it generates income like interest or dividends. Ask yourself if you've inherited assets and whether they produce taxable income. Understanding the tax implications of inheritance will help you plan accordingly and select the right tax bracket. Gambling winnings are taxable and must be reported as income. Ask yourself if you've had any gambling wins this year and keep records of your winnings and losses. Reporting gambling income accurately is important for determining your tax bracket and staying compliant with tax laws. Business owners have unique tax considerations including business income, expenses, and potential deductions. Ask yourself about your business structure and whether you're maximizing available tax benefits. Proper planning can help you manage your taxable income and select the most advantageous tax bracket. Significant medical expenses may be deductible if they exceed a certain percentage of your income. Ask yourself if you've had high medical costs this year and whether you qualify to itemize these expenses. Deductions for medical expenses can lower your taxable income and affect your tax bracket. Mortgage interest is often deductible if you itemize your deductions. Ask yourself if you own a home and are paying mortgage interest. This deduction can lower your taxable income and potentially move you into a lower tax bracket. Keep records of your mortgage payments for accurate reporting. Childcare expenses may qualify for tax credits or deductions. Ask yourself if you're paying for daycare, after-school care, or other qualifying services. Keeping receipts and documentation will help you claim any available tax benefits and potentially lower your tax bracket. If you're self-employed or have significant non-wage income, you may need to make estimated tax payments throughout the year. Ask yourself if you've made these payments and whether they're sufficient to cover your tax liability. Properly estimating your taxes can help you avoid penalties and ensure you're in the correct bracket. Tax-deferred accounts such as traditional IRAs or 401(k)s allow you to postpone paying taxes on contributions until you withdraw the funds. Ask yourself if you have these accounts and how withdrawals might affect your taxable income. Planning withdrawals strategically can help you manage your tax bracket over time. If you're of retirement age, you may be required to take minimum distributions from certain retirement accounts. Ask yourself if you're subject to these rules and how distributions will affect your taxable income. Proper planning can help you avoid penalties and manage your tax bracket. Disability income may be taxable depending on the source and your total income. Ask yourself if you're receiving disability payments and whether they're subject to tax. Understanding how this income is treated will help you accurately determine your tax bracket and avoid surprises. Scholarships and grants may be tax-free if used for qualified education expenses, but some portions could be taxable. Ask yourself if you've received any scholarships or grants and how you've used the funds. Proper documentation will help you report this income correctly and determine your tax bracket. Some fringe benefits from your employer, such as bonuses or personal use of a company car, may be taxable. Ask yourself about any benefits you've received and whether they should be included in your income. Accurately reporting fringe benefits ensures you're using the correct tax bracket. The standard deduction is a set amount that reduces your taxable income. Ask yourself if claiming the standard deduction is more beneficial than itemizing. Compare both options to see which lowers your tax bill the most and potentially moves you into a lower bracket. Some types of income, such as interest from municipal bonds, may be tax-exempt. Ask yourself if you have any tax-exempt income and how it affects your overall tax situation. Understanding which income is exempt can help you accurately determine your taxable income and tax bracket. Certain situations may trigger additional taxes, such as the net investment income tax or the additional Medicare tax. Ask yourself if you meet the income thresholds for these taxes. Factoring in additional taxes is important for accurate tax planning and bracket selection. If you have unused losses from previous years, you may be able to carry them over to offset current income. Ask yourself if you have any loss carryovers and how they might affect your taxable income and bracket. Properly applying carryovers can help you minimize your tax liability. The Savers Credit rewards low and moderate income taxpayers for contributing to retirement accounts. Ask yourself if you qualify based on your income and retirement contributions. Claiming this credit can reduce your tax bill and help you save for the future. Setting clear tax planning goals can help you make better decisions about your tax bracket. Ask yourself what your financial objectives are, such as minimizing taxes, maximizing refunds, or saving for retirement. Aligning your tax strategy with your goals ensures you're making the most of your opportunities. Tax laws change frequently and staying informed is crucial. Ask yourself if you've reviewed recent tax law updates that might affect your bracket or deductions. Keeping up to date ensures you're taking advantage of new opportunities and complying with current regulations. Choosing the right tax bracket involves asking a variety of important questions about your income, deductions, credits, and personal circumstances. By carefully considering each of these factors, you can make informed decisions that optimize your tax situation. Remember to keep thorough records, stay updated on tax laws, and consult a tax professional if needed. With the right approach, you'll be well prepared for tax season and confident in your financial choices.